I'm frustrated like all of us are, but
Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja and this is Market Today, a show where we'll get you all the latest market updates, sectors that are buzzing in and much more. Well, no Monday blues for the markets and what a comeback for the bulls today. Let's see how the markets are trading at this point in time. So Nifty well above that 17,700 important mark at day's highs on your screens, and Sensex also above 60,000 important mark, trading 386 points higher in today's trading session. And what a comeback. I mean, the markets were quiet in the early morning, but look at the levels at which markets are trading at this point in time, and let's see what's really contributing towards the rally that we are seeing today. So clearly on the back of a few stocks, HDFC Life, look at the performance. I mean, it's up to the tune of 7% today, and this is actually on the back of the news that the RBI has allowed HDFC Bank or HDFC Limited to increase the shareholding to more than 50% in HDFC Life Insurance and HDFC Ergo. And on the back of this news, the stock is doing pretty well in today's trading session. It is up to the tune of 7% right now. Tata Consumer, this stock is also trading well in today's trading session, up to the tune of 4%. Wipro, now the company has announced a buyback, and on the back of this news, the stock is doing well today. It is up to the tune of 2%. ICICI Bank, the bank posted stellar set of numbers, and a few brokerage firms have also initiated their coverage on this particular bank, and they see a significant upside in this counter. SBI, ahead of its numbers, SBI is also doing pretty well in today's trading session, up to the tune of 2%. And Adani Ports also in focus today. Now it is up to the tune of 1.5%. But which are the stocks which are not contributing in today's rally? So we have the likes of Dr. Reddy, Sun Pharma. So Pharma Sector is not doing that great. And if you see the stocks like Cipla, Dr. Reddy, Sun Pharma, that are not contributing much to today's rally. Divi's Lab, of course. Then we have Bharti Airtel, UPL, Eicher Motors. These stocks are also trading on a flattish note today. And if you see the sectoral moves as well, sectorally, a few sectors are doing really well, including Nifty Bank. Now, Nifty Bank has crossed an important mark of 42,600 level. So that is an important mark. Keep an eye on that. Banks are actually performing really well in today's trading session, and also financial services. Look at this particular index. It is also up to the tune of 1%. FMCG, 0.5% uptick on that. IT sector. Now, we saw that TCS and Infi were not able to perform that better after, of course, the March earnings that the companies posted. However, HCL Tech, the numbers have not disappointed that much, and IT stocks are also in focus today. Nifty IT also up to the tune of 0.7%. Nifty Metal, PSU banks, private banks, Realty, these are the indices that are doing well in today's trading session. What's not doing well? Nifty Media is not able to perform that much better. Nifty Pharma also trading 0.8% lower. Healthcare index, and these are the indices that are not trading well. So now the question is that the bulls are back, but are they here to stay? To discuss this and much more, let's welcome our guest on the show today. We have with us Mr. Sunil Damania, who is the Chief Investment Officer at Markets Mojo. Thank you so much, Mr. Damania, for taking the time out and joining us here on Business Today Television. And what a comeback for the bulls, right? I mean, on the back of good set of numbers from ICICI Banks, Reliance Industries, and then, of course, relaxation for HDFC Twins, and we have Wipro buyback also. So many triggers. So now it is very important to understand that will this rally sustain, and where are the markets headed in the near term?
So thanks a lot, Tanya, for having me on this show. So you're right. Today, I think definitely the bulls are definitely in control. And even if you look at the advanced decline ratio, it clearly in favor of the advances. And if you look at, so what has clearly come as a Tanya a bit surprise to everyone is that if you look at the mid and small cap, and if you look at last 1 month or so, the mid and small cap seems to be outperforming the large cap, and that's a very good sign for the rally to sustain. Because what we have observed in the past, as and when the rally has been little narrow, it did not sustain at the higher level, and every high in the market, investors gave up the sales to the investors. But this really seems to be more broad based, and that's a very happy sign. But having said that, I think the one key concern that we need to continue to focus on what's happening on the to the complete banking space in the United States. And if you today evening, some of the small size bankers are from the US are going to announce their financial number, and we don't know what's going to happen. If you remember, the players like JP Morgan seems to have gained some amount of deposits. Why? Because of SVB crisis really forced the depositor to move away from the small and medium sized banks to the large size banks, and that due to that, some of the small size banks seems to be losing their deposits here, and they're increasing their NIM. So I think we need to really wait and watch what happens. If you look at last 1 month, the banks and Nifty Bank and Nifty Finance did extremely well. So whether this really gets sustained or not, and it's a lot depend upon what happens to the data that comes out from the US. And Wednesday we do have an inflation number coming in from the United States, and that's the last inflation data that Fed would have before they announce the next Fed policy meeting. So we do expect, yes, today the market has been in green, there has been overall rally, but we do expect market to remain a little volatile, at least for next couple of months. And even if you look at the result season, which you're discussing about, Reliance numbers and ICICI Bank numbers and so on and so forth. But one good analysis that we see, we have did, and we realized that more company decline post result in terms of the share price as compared to advance. And that clearly shows that till now market is not really cheered up or really liked by what's happening on the result front. I think we need to really wait and watch. It's too early to, in fact, announce a victory at this point of time. At least for the short term, we do expect market to remain volatile.
Okay, markets are expected to remain volatile, and it's a wait and watch situation. That's the word coming in. And also, let's talk about a stock, a sector and a stock which is actually in focus today, and that is HDFC Life. So if you see, the RBI has actually allowed HDFC Bank or HDFC Limited to increase the shareholding to more than 50% in HDFC Life Insurance and HDFC Ergo. And this is a part of the clarifications provided by the RBI for the merger of HDFC Limited and HDFC Bank. So HDFC Life, if you see, the stock is up to the tune of 6% as we speak, and the stock is actually not able to perform well over the past few years. However, a few brokerage firms have now actually initiated their coverage and are now bullish on this particular counter. So how do you see this particular development, and what is, what are your thoughts on this entire space?
So I will not be able to comment
I know that.
specific company, but what I will give you a flavor. If you remember, on the same channel I had come post budget, and at that point of time, because of some announcement in the budget where there was a limit in terms of how much premium you can pay annually, and there was some amount of selling pressure which was built up on life insurance company. And I had come on this channel suggested very clearly that every dip in the life insurance company gives us a great opportunity to buy. And whether you look at HDFC or ICICI or other life insurance company, except LIC, for some known reason, I think they have done extremely well. And we continue to believe that good money to be made in a life insurance company. Why we believe so? Because we do believe that penetration of life insurance in India still continues to run very, very low. Number one. Number two, post-COVID, people did realize the value for the life insurance. If something happens to the family earner, what happens to the family after that? And I think people have become very conscious of that fact and become more and more conscious. So we do believe that life insurance as a sector, I think is in a very great bull run. I don't think this is 1 month or 1 week kind of a rally. We do believe that what happened to the banking sector in last 5-6 years in terms of sustained wealth creation, something similar can happen to the life insurance. Why? Very limited. See, if one we need to also remember the complete sector is undergoing consolidation. Exide sold their business to the HDFC and so on and so forth. So I think there is a consolidation happening. The penetration is low, and awareness about life insurance is all the drivers that will make life insurance a business to be in for many of the investors. So I would request every investor to increase allocation to the life insurance segment.
Okay, that's the verdict coming in on insurance sector. And also banking space is also in focus today. I mean, Bank Nifty, if you see, it has crossed the important mark of 42,600. So what is your take on when it comes to the banking sector? Because I think the expectations are very high. ICICI Bank posted a stellar set of numbers, and IndusInd Bank also very much in line. So would the banking sector be able to deliver, especially in the near term, according to you?
So, Tanya, I have a little contra view as compared to some of the other experts who are extremely bullish on the banking and the finance. My
Okay.
sense is that even if you look at the ICICI Bank, and if you happen to listen to the con call, they did mention that NEEM is at the peak, and from this level, it has to go down. It cannot go up from this level. So that's one headwind that we need to all budget in when we look at the numbers. Number two, I think I do believe that a lot of credit growth that has happened is all credit driven by the unsecured loans, and there is a high probability that we could see some amount of a NPA level moving up. Maybe not in the June quarter, or maybe by September quarter, we would start seeing that. Number three, if something has to happen to the US in terms of the banking, and when there is a fear that the commercial real estate seems to be little under stress, and a lot of mid-sized and small-sized banks have a lot of exposure there in the US in the commercial real estate. And if something has to go wrong, it will further create some amount of headwinds for the Indian banks and financial. So my sense is that all good things are already in the price. I think market somewhere is not able to foresee the NIM coming down, NPS going up, and that will create some amount of headwinds. So my sense is that it can underperform significantly going forward. I'm not saying that will happen in 1 week or 1 month, but even if you have to look at the portfolio allocation, I think this is not a time to be over exposed to the banking and finance. Maybe I would suggest you recommend a little underweight to the banking and finance.
Okay, absolutely. So that's the word coming in on banking space. By the way, Sensex is now up over 400 points at day's high right now as we speak, 60,070 odd mark. So what a comeback for the bulls, I must say. But now let's come to the IT sector as well, because I think IT index is also doing well in today's trading session, and this space is also in focus because I think Infi and TCS posted a weaker set of numbers. However, HCL Tech numbers have not disappointed. So how should we approach this particular sector at this point in time? Because if you see mid-cap, IT has actually managed to perform better, than large-cap peers. So what are your thoughts on this space?
So, if you look at the Tanya, historically, whenever banking has underperformed, IT outperform, and vice versa. And I was saying that bank may underperform. It's not a time to go overweight on bank. Very obvious benefit of that would be the IT sector. And very interesting thing, Tanya, while if you look at the company, those who declared numbers, the best performing post in terms of share price has been from the IT, whether it was Mastek, whether it's a SANT, who have done extremely well post result. At the same time, the worst performing is also from IT, well, Infosys. So it has been a little mixed bag. There is some fear about artificial intelligence that coming in chat GPT and so on and so forth that could impact the coding business of the IT software. But more we speak to the management, more we get a clarity that even if that has to happen and it has to cannibalize, it has to happen on the low end of coding. And I think what is going to happen to the mid and the complex coding, I think Indian IT service company will continue to do well. If you happen to listen to the HCL Tech commentary, they don't see much of an headwinds on the BFSI segment. The only danger as we speak on the IT software side is that what happens to the BFSI space in the US. For some reason, if the commercial real estate has to go little come under stress and so on and so forth, there could be some amount of cancellation or postponement of budgets. So right now, our view on the IT software, so at the beginning of 2023, we will bullish. We suggested to go overweight. Right now, we suggest to go little neutral and be stock specific. We do believe that within the segment, some companies will do extremely well, and some will continue to struggle to give a meaningful returns to the investors.
Okay, absolutely. Be stock specific. That's the word coming in. And also, Mr. Damania, if you see new age internet companies, they are also in focus. As we have seen, a lot of brokerage firms have actually initiated their coverage on these particular companies. I mean, these companies have corrected significantly from their recent highs. And if you see today also, Paytm is doing well, but Nykaa is actually trading at its 52-week low. And Zomato was also in focus a few days back. So what are your thoughts on these companies? And, some experts are even calling, this space as a new emerging themes for investors. So what are your thoughts on all these new age internet companies?
So again, I will not go company specific, and I'll just give you a flavor of what's happening.
Yeah.
If you to listen to the Reliance con call, the management commentary post result, I think they have a very mega plans. Whether it's a to take on Nykaa in terms of their cosmetic business and so on and so forth. They have a netmates and whatnot. They are starting their financial services. So I think we do expect that while new age technology companies are where the flavor of the season, and a lot of investors did took a lot of exposure thinking that we can make exponential return on that. But I think the reality is that they have not made money. And our sense is that the kind of valuation they are making, commanding the kind of, and there is little sense in terms of what kind of profit they can make, eventually. I think whatever looks like that they will, turn around in next 3 years, 4 years, and win it, exit, all kind of scenario. It seems that new players are going to come. They are going to come with a better business model, and they are not going to basically incur on that. So my sense is that they will continue to underperform in a very significant period of time. Of course, there will be some spot for 1 week or 1 month, but will we be able to see a sustained rally on this kind of encounters? Looks extremely difficult. And I think some of the big dairy from the established corporates are going to make a lot of inroads into that, and that's going to make life a little difficult for some of the incubate players. So I think my advice would be to stay away.
Okay, stay away. That's the advice coming in. And also, since we're talking about sectors only, so which are the sectors that you are extremely bullish on, especially if you talk about from a near-term perspective, and which are the sectors that you're bearish on?
So, Tanya, one sector which looks not many people are discussing, and also you mentioned in your opening commentary about the pharma, which has not done well.
Yeah.
But our sense is that pharma should do extremely well. Why we believe that? Because if you look at the US generic prices, they've started stabilizing. In fact, it was coming down very drastically. Now they've stabilized. That's one big relief that could come in. Number one. Number two, the domestic business in the formulation continues to remain very robust. And third thing is the valuations, I think, have been really robust. So if you look at, like today, I understand that pharma has been not a very sharp performer. But if you look at 1 month, I think the second best performer after finance. So somewhere the smart money has started moving into pharma. People are not talking about it. Maybe people will talk about 3 months and 6 months down the line. But we believe that pharma is a good space to be in. And that's why we are extremely bullish. So if you have not taken any exposure to pharma counter, we suggest that you please go and increase your weightage to the pharma in your portfolio. But that's one sector which we believe should do well. Uh, which we are bearish at this point of time. Just definitely banking and finance just look little. We believe that there would be a lot of headwinds that could come in, and hence our suggestion would be to remain little underweight on the banking and the finance.
Okay, absolutely. So pharma is likely to perform better, so keep an eye on that. And before we let you go, Mr. Damania, I want to understand from you that are there any mistakes that investors should avoid, especially at this point of time? I mean, we are seeing a bit of a bull run today. I mean, a good bull run, I would say. But however, I mean, it's a volatile market. So any mistakes that investors should avoid, especially at this point in time?
Definitely. So I think, today, I think if you look at the number of active retail investors in the country have declined
Yes.
6 or 7 months on a row. And one of the reasons is that some people, investors do believe that, in equity market, you can make quick returns. That's not the way one should look at it. So my advice always been that be disciplined when you come to the equity market. Number two, have patience. Equity market doesn't move up only in one direction, that is up. It will be up and down. But if you are remain invested for long term, you will definitely make money. And number three, avoid herd mentality, in the sense, if others are buying this sector or the company, and if you start doing that, you will always underperform the broader market. This is the advice I would give it to the retail investors.
Okay, golden words coming in. And on that wonderful note, thank you so much, Mr. Dabania, for taking the time out and joining us here on Business Today Television.
Thanks a lot, Tanya.
Okay, on that wonderful note, let's wrap up this edition of Market Today. But let's first, before wrapping up, let's take a quick wrap on how the markets are trading at this point in time. So, of course, Sensex above maintaining that 60,000 important K mark, and 60,000 important mark, 409 points uptick that we are seeing on Sensex, and Nifty also maintaining that level, 17,700 important level, 121 points uptick there on Nifty. And of course, there are a few stocks that are doing well in today's trading session. HDFC Life continues to be the top performer of the day, and along with that, Tata Consumer, Wipro, Titan among the other prominent gainers in today's trading session. So with that, let's wrap up this edition of Market Today. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn, Instagram. And you can share your stock queries, stock feedback, and you can also stay tuned for all the latest market updates. So many thanks for tuning in for now.